And for more on China's economy, we're joined by Sung Won Sohn. He's a professor of economics at California State University. Thank you for joining us. Good to see you.
Thank you.
Professor, the head of the IMF, Christine Lagarde, said that the outlook for China's economy is, quote, not all doom and gloom, and that China is expected to gain momentum next year, but that they do expect China will miss that 7% GDP target and come in at 6.8%. Overall, in the big picture, what is your view?
China's economy is slowing. This year, we are expecting 6.8% growth. Next year, it will probably dip further and probably grow about 5.8%. The composition is as important as the overall number. The reason why economic growth is slowing is because we are seeing reduced investments in real estate and factories. However, we are going to be seeing more consumption. So I think rebalancing the composition, that is a more interesting story than really the overall economic growth that we all know about.
Well, whilst this rebalancing is happening, we are seeing a big increase in foreign direct investment. FDI rose more than 9% to just over 92 billion in the first 9 months of this year. And China is now the second highest global destination for foreign direct investment. So surely that's a good thing. What does this indicate about foreign investors' confidence in China?
The confidence is still pretty strong and healthy. Foreign investors will invest in China or, for that matter, in any other country if they think they can make profits. And that depends on economic growth. So even though overall economic growth is slowing down, they are not going to be investing in real estate or in factories. They are going to be investing in consumer-related areas such as recreation, household appliances, bicycles, and shoes and consumer goods, and et cetera. So I think, again, in the future, China's economic growth will be driven by consumption, and then that's what the attraction is. And we are seeing more and more foreign investments to take advantage of oncoming increase in consumer spending.
And what do you think the Chinese government is doing and should be doing to help boost the transition for more consumption?
Well, the government is trying to move more people from rural to urban areas. When they move from countryside to the cities, they are going to be needing apartments and then appliances, bicycles, and then many consumer goods. And that's one of the ways that the government is going to perk up economic growth in China. So I think, that's very important. Of course, on a macroeconomic side, the People's Bank of China has been lowering the interest rate and providing more liquidity, and it will continue to do so into 2016. And I wouldn't be surprised at all if the government of China decides to stimulate the economy to give some kick to overall economic growth. So I think the government has and will continue to do what it can to make sure that economic growth is a soft landing, not a hard landing in 2016.
Well, a big area of focus has been the yuan. It has appreciated about 0.4% against the dollar. It hit its highest level since the PBOC devaluation. Do you expect stability now at this level?
Well, it depends whether you're talking about against the dollar or the euro or some other currency. Yes, against the dollar, I think we will see some stability in the short run. But over time into 2016, I would expect some additional further depreciation based on economic factors. U.S. Central Bank is going to be raising the interest rate. U.S. economy is doing better than some other countries. But in China, economic growth is slowing down. The People's Bank of China is cutting the interest rate. So under these conditions, it is all normal and natural to see some depreciation of the yuan against the dollar. However, I think the yuan will remain stable or even appreciate against some other currencies, such as Brazilian real or Indonesian rupiah, and et cetera.
Well, very quickly, China recently had its Golden Week holiday to boost house sales. We had authorities cutting down the minimum down payment for first-time buyers. Seems this was effective. Do you see more measures by the government being taken to boost the housing sector? Do you see that trend continuing?
I think so. Housing is very important. It's important in any economy, but especially important in China. As a result, to have a meaningful economic growth, housing has to be doing well. So the government has been obviously cutting the interest rate and then trying to boost economic growth, even though it is slowing overall. And but let's not forget the fact that people are moving into the cities, and they need more housing. Population is rising, not rapidly, but going up. Economic growth is also positive, even though it is slowing. So when you look at all these factors, they mean better conditions for housing. So I think house prices are going up nicely in major cities, and we're also seeing inventories for sale going down. So this indicates that the housing market is not only stabilizing, but it's going to do better in the future.
Some definite positive indications there. Thank you so much, Sung Won Sohn, economics professor at California State University.